Well, it's 12:10, so welcome everyone to CapEd Credit Union Presents Lunch Money. Our webinar today will be, will interest rates stay low? How do you protect yourself in a changing rate environment? And today we have our wonderful host, Kittie Shervik, CapEd's VP of Mortgage Lending, and Dan Sullivan, CapEd's Mortgage Loan Manager. And just a quick reminder, we will take questions within the chat feature. So if you can open up your chat window, if you have questions, please feel free to put your questions there. And towards the end of the webinar, I will present those to Dan and Kittie. And if you think of things along the way, please just put them in there. This is our final week for the Lunch Money webinar series. So Dan and Kittie will also be hosting on Thursday. Thank you for being here for that. And with that, I will turn it over to Dan and Kittie. Thank you so much for being here.
Thanks, Lisa. It's fun to be back, and Kittie and I have worked together for years and years and years and years. I think between the two of us, we have somewhere in the neighborhood of 70 years of experience in the mortgage industry. So a couple of the questions that we always get is, especially lately, is what's happening to interest rates and what's happening to values. And if you were with us last Tuesday, we had a couple of realtors on board and chatted about home values and where they're going, and everything looks like they're just going to continue up for now. I mean, everything that goes up must come down, but for the time being, I think we're going to see home values continue to increase. And so our discussion today is really more about interest rates and where interest rates are going. And so we're going to give you a little information on historically what interest rates have done, what we think they're going to do, and then ways to protect yourself should we see interest rates go up or in the near future. When people ask me what interest rates are going to do, I usually give the standard answer: they're going to go up, they're going to go down, or they're going to stay the same, and I'll absolutely guarantee that. So nobody really knows, but even the smartest guy in the room wouldn't know what interest rates are going to do, because there's so many different things that affect them. We'll talk a little bit more about that. So hang on, my screen's not advancing here. There we go. Okay, so I wanted to look at interest rates historically. So I went back and pulled the last 50 years of mortgage interest rates and put those onto a chart. If we go back into 1970, you can see we were about 7%, and then in the 80s, in the Carter era, with the inflation, the different things that were happening in the mid 80s, we saw interest rates for the 30-year fixed rate mortgage actually go up into the 16, almost 17% range. And then they dramatically started falling off in the late 80s into the 90s. You can see we in 95 to 2000, we kind of hit some stability there in the 7 or 8% range, and then about 2000 we saw them really start to fall off, and leading us all the way down to 2020, where we are now, 2021. Right now we're seeing interest rates at about 3%. I think our 30-year fixed rate mortgage at CapEd right now is 3% today for a purchase. So looking over the years, one thing that is kind of interesting to point out, if you were to flatten that line out and do an average, you'd probably see interest rates somewhere, an average interest rate over the last 50 years would be 7-8%. So we are at historically low levels, and probably going to be there for a while. But keep in mind that 7-8% is kind of an average, and money's on sale right now and has been for quite a few years. So now, if interest rates do go up, it's not a good thing, but it's also not necessarily a bad thing, because one other thing to remember is banks, credit unions, financial institutions are able to pay more in savings accounts, CDs, and things, so those secure accounts when interest rates are higher. So even if we saw a 7% interest rate, you're probably looking at rates for your savings account that are in the 2 or 3% range, as opposed to the 0.5% that you're getting on your savings accounts right now. So there is an upside to higher interest rates, and I mean, I think I remember at one point I was getting 5 or 6% back in the 80s when you see the spike in the chart there on my passbook savings. So for a short period of time, it was pretty cool. So higher interest rates aren't necessarily a horrible thing, but I'll also want to show, we'll talk about affordability here in just a moment, but now let's talk about where rates are going from here. And that's kind of an unknown. There's so many, like I said, so many different things that affect interest rates. There are obviously COVID, nobody saw that coming. There is economic events, wars, all sorts of different things that can affect interest rates. But so when I show the rates where they're going from here, some of the mortgage bankers forecast, it's all a super wild guess. And keep that in mind because nobody can predict an event like COVID or 9/11 or some of the economic events that we've seen in the past. So, but let's talk about this. It's June of 2021 right now, and like I said, our interest rate is at 3%, and this is showing 3.02. We every economist I've ever listened to in my entire career talks about how by the end of the year we're going to see a higher interest rates than we do now, and that doesn't always happen. But you can see where they're predicting higher interest rates into the 3.59 by December, and then through 2022 where we stay in that 3 range. And really, over looking at the right side of the chart, it's 2024 before we get into the 4s, and 2025 they have us up into the 5s. But again, keep in mind that this is an economist super wild guess, and I'm the guy who back up here really quick. I'm the guy who back in 2000 was telling people that these rates are historically as low as we've ever seen them, and so jump on it now because these are not going to last. And not only have they lasted, they've gone lower. So, Kitty, what do you think as far as where rates are going from here? Any from your perspective, does the MBA have anything here, or is it
So Dan, you touched right on it. The point is economic indicators, and we need the economy to continue to grow. And COVID, it hit our country hard. Idaho was a little more isolated than other parts of the country. But that being said, we need housing to continue. And the housing, it's so many different factors that go into housing, improve and contribute to our economy. So I do not, and obviously we're not economic majors here, but I do not see them taking a drastic climb. We will see a slight increase like you're seeing, but we need the economy to continue to grow.
Yeah. And if this chart turns into reality, if we see this slow increase and easing back into the 5% range, even into the 6% range, if it goes slowly, the pain points are very, very limited, and there again, a higher interest rate is not going to harm our economy. If it jumps dramatically, then we see a lot of pain. If it goes up slowly, gradually, like this chart shows, then we get a higher interest rates, higher savings rates, higher CD rates, and so it's not all bad. let's talk about how interest rates affect affordability. And this is just something to keep in the back of your mind if you are one of those people who are thinking about, I'm going to buy a house down the road. In a raising rate environment, let's say you had $1,000 payment, and this is just on your mortgage. This is just principal and interest. This doesn't include the taxes and the insurance. But at 3%, you can see a $1,000 payment would get you a $237,000 loan, and a 6% payment is $166,000. So about $70,000 difference in that. So as interest rates rise, the amount of loan that you can afford goes down. And there again, we're just showing this to give you some reference point of what happens to your purchasing dollar, or your ability to make a payment, and the amount of money you can borrow. So that's something to kind of keep in mind. Now, there's loans to avoid in a rising rate environment, and I'm still looking at those rates that the Mortgage Bankers Association was predicting. We're really not in a rising rate environment at the moment, but if we get into one, then certainly adjustable rate loans are something that you may want to avoid, because an adjustable rate loan typically is something that is fixed rate for 5 to 7 up to 10 years, and then it starts adjusting. So in a higher rate environment, if you understand how these work, they are actually a pretty cool tool. You can borrow, let's say the interest rate was 6% today, you may be able to get a adjustable rate loan at 5%, and that's fixed for 5 years, and then it starts adjusting, and it can adjust to way above the 5 or 6% you borrowed it at. But there again, I promote these sometimes as tools, and keep in mind that a tool is a something. It's a method of helping you accomplish something, but a tool can also hurt you if it's used incorrectly. If you've ever tried to pound a nail into a 2x4, I'm told you can do it with your bare hand, but it's very, very painful and takes a long time. And so if you use a hammer, it makes it a lot more easy, but you can really hurt yourself with a hammer if you don't understand how to use it or use it incorrectly. So just for your loan, I'm not saying that certainly right now you don't want to probably use adjustable rate loans because the fixed rate is so low. And so knowing that the interest rates are going to rise, I would avoid adjustable rate loans at the moment.
So Dan, let's talk about when an adjustable rate mortgage is beneficial. You mentioned, the fact that we're in such a low rate environment, it isn't the time. But when rates rise, generally speaking, the adjustable rate then will be a little lower. And that's where you ask yourself, how long you're going to be in the home. Because as Dan indicated, most adjustable rate loans are fixed for a specified period. And so for someone that's going to live in their home less than 5 years, locking in on a 5/1 ARM, get that lower interest rate. As Dan, I loved how you used the word tool, being educated, knowing when it's a beneficial move for you and it would benefit you financially. That's when an adjustable rate mortgage would be appropriate.
Right.
But in this low interest rate environment, I agree, Dan, it is not.
Yeah. And as a loan officer, there's been many, many times where I have promoted adjustable rate loans because of that very reason. You can, if you think that you're going to be in the home for 5 or 7 years, if it's your forever home, you probably never want to use a adjustable rate if it's unless you plan to refinance from time to time. And but if it's a home you're going to be in, if it's your first home and you plan to have a family and your income's going up in the next 5 to 7 years, there's a lot of times where adjustable rate loans do make sense. So you're exactly right, Kitty. Balloon loans are similar to adjustable rates, and we don't see a lot of these around anymore, but just to kind of keep it in mind, A balloon loan is a loan where you'll have a good interest rate for a period of 5 to 7 years, and then the loan comes due. And so you need to pay it off or refinance it at that time. And so right now, if somebody was to offer you a balloon loan, you kind of want to shy away, because there again, the fixed rate loan is so affordable, and the rates are so low on them. And so you don't want to have to refinance out of your loan in 5 to 7 years to have a balloon. So there again, a balloon loan at a higher interest rate might get you into a house. And if you knew that there again, your family situation was going to change, your housing situation, your income situation was going to rise, then a balloon loan might be something to look at for a short period of time. So, so there again, another tool. HELOCs. Now we are going through a lot of using a lot of people are pulling HELOCs right now, and for the right purpose, they're the right tool. And so if you're going to pull out $30,000, $40,000, $50,000 in a HELOC to remodel the house, to pay college expenses, to do something that's short term, a HELOC is a powerful loan that can help you with that. It works just like a credit card, where you pay interest on the money you're using, and you can pay it up, pay it down, and it's there to use over and over and over again. And you pay it down, use it again, and just like you would your Visa card, except it's tied to your house, so it has lower interest rates and advantages for your taxes if you're using it for home improvement. I wouldn't.
The reason, just to expand why he's including HELOC, it's because it is an adjustable rate. Again, yeah. Your interest rate is not locked in.
Yeah, thank you. So they're typically tied to the prime interest rate. So as the prime interest rate goes up, your HELOC is going to go up with it. Mm-hmm. And so I wouldn't be using a HELOC right now to finance a long-term purchase. Let's say you decided to buy you have a lot of equity in your home, you decided to buy a cabin up in the mountains. I wouldn't use a HELOC to finance that right now. I would use a fixed rate loan. And so there again, it's the right purpose for the right loan. And we are seeing some people taking out some large HELOCs that they are using for long-term purchases, and so I would advise against that. But there again, that it depends on the particular situation, and you can certainly visit with one of our loan officers who would help you determine whether or not that is a viable option or a viable loan to use for what you're going to use it for. A couple of ways to protect yourself as interest rates rise, and we've talked about fixed rate loans. Money's on sale. They are very low interest rates right now, and so you get a fixed rate loan, and I don't think that these rates. I've said it many times over the last 20 years. I don't think rates can go any lower, and but keep in mind I've been wrong for the last 20 years. So right now I'm saying I don't think rates can go any lower than the 3% we're currently at, and we'll be surprised if they do, but also at the same time, I don't know how surprised I'd be. Kitty, how low can rates go?
Yeah. Let's get our crystal ball out for that one.
Yeah. It seems like they can't go any lower. If you're thinking about purchasing a home or building a home, there is a powerful product that's available only through CapEd, and it's CapEd's Lock and Locate. And this is, I don't know of another lender who has this available. I'm not saying there isn't, but I've never heard of anybody else offering this program. Lock and Locate.
Kitty, Kitty, are you able to hear Dan?
I cannot. I can hear you.
Okay, it looks like he dropped off and is coming back. He'll jump back on.
Okay, I thought maybe it was on my end, so I was just checking my connection.
Yeah, it looks like he's coming. He's joining back on. So if everyone, we apologize for that technical error there. It looks like Dan is back, and you're just need to unmute. But glad to have you back, Dan.
Okay.
Oh, we can hear you perfectly. Great. Welcome
There
back.
you go. Okay. I don't know where you lost me, but we were talking about lock and locate.
We just started. And can we see the lock and locate on the screen? I am not seeing it on my end.
Let me reshare here. And
It's there. Perfect.
okay. Not sure where I lost you, but let's back up real quick. So lock and locate is a cap ed product that allows us to lock out for an extended period of time, 6 months to a year, at today's interest rate. So we can, if you go to another lender, you go to XYZ mortgage lender and ask them to lock your loan for 6 months or a year because you're building a house, they can often do that, but the rate is through the roof because they're locking on an extended interest rate, and so the longer you lock, the higher the interest rate is. CapEd has a program that allows us to lock for up to 6 months at today's rates and up to a year on new construction. Let's talk about this just a little bit. We allow you to actually lock on today's interest rates and go shopping for a used or a new home, an existing home or a new home, for up to 6 months. So you can lock today at our 3% on a 30-year fixed and then go out and go look for a home that you have not yet identified. And if rates go to 4 or 5%, if something crazy happens, rates go to 4 or 5%, you're locked at 3% for up to 6 months.
Dan, what I love about that is in this economy that we're dealing with, and so many offers being placed on homes, again, like you said, lenders generally do not lock until they actually have a property specified. And the fact that consumer and borrower can go out and find their property without worrying about interest rates, huge benefit.
Yeah.
Great program.
Yeah. On new construction, you can actually lock for up to a year. Now the rates are slightly higher when you go from 6 months out to a year, but you can, let's say you sign a contract today to build a 2,200 square foot house with labor and construction and permitting and everything else that is tied to that. It's going to take probably 9 months to a year almost for them to complete that right now. And so we're able to lock your interest rate in today, and you can go out and have that home built and know what your interest rate's going to be. We've had situations in the past at other companies when I worked where somebody would sign a contract to have a home built, and then by the time the home's completed, the interest rate's gone up pretty dramatically, and they can't afford the payment or don't want to afford the payment based upon what the interest rate is when the home is complete. So we've come up with a program that allows you to get around that. And so also, you get a one-time float down with this program. So let's say you lock today on our 3% purchase rate and for 6 months or a year, and down the road, you're ready to go. So within 30 days of actually closing, the interest rate has fallen to 2.5%. You can exercise your one-time float down and you get the 2.5%. So doesn't get any better than that. So I always tell people on the new construction, I think there's a 0.5% add-on for the to go up to a year. I'll have to look that up, but you lock today, it's 3%, but you're going to lock for a year. So you're actually paying 3.5%. And at the time of the construction's done, if the interest rate's still at 3%, you get 3%. If the interest rate's at 2.5%, you get 2.5%. If the interest rate went to 5%, you're still locked at 3.5%. Either way, it was a pretty smart decision to make. Now, we do require a 1% deposit. So let's say you're borrowing $400,000. We're going to require you to make a $4,000 deposit to us, but that's refunded to you at closing and goes into part of your closing cost becomes that. So pretty powerful program. And there again, I don't know of anybody other than CapEd that offers the lock and locate. And so if you have questions on that, we can certainly reach out to Kittie or I or one of our loan officers who can help you through that. And so anything else?
On our last session, you mentioned we were talking about getting pre-qualified with a loan officer. You know, this goes piggyback with it. You get, when you're knowing that you're ready to start searching for a home, you meet with a loan officer, you get pre-qualified, lock in that interest rate and take the uncertainty, take the fear of tomorrow away. You know you're qualified for a mortgage and you know your interest rate is locked in. And then you just have the fun of going out and finding that perfect home for yourself. So remember CapEd and the lock and locate program, because it's a great tool for you.
Exactly. Okay. Wanted to put our contact information up. If you have any questions about this or anything to do with mortgage, between Kittie and I, we have a lot of experience, and we don't have the answers. We can certainly find the answers, and so if you have questions from anything we talked about or anything to do with mortgage or real estate, there again, reach out to either Kittie or myself. We can find the answer. We can point you in the right direction. And so feel free to use us as resources. And then I also wanted to promote on Thursday, we're going to talk about, let's say you already have your mortgage and you're thinking about retirement. We have a slogan here at CapEd that we say, don't retire before your mortgage retires, or retire your mortgage before you do. And so we're going to talk about some different ways on Thursday that you can retire your mortgage. There's different methods. You can certainly make larger payments and pay off your loan faster, but there are some other ideas and different ways that you can retire your mortgage before you retire. So that's Thursday at 12:10. And so Lisa, any questions from the chat?
Yeah, there was one question, just kind of general, about do we lend outside of Idaho?
We have the ability to lend in almost all 50 states. The lock and locate program is only available in Idaho. It's a portfolio program, and so we have sources where we can lend in virtually any state across the union. And although give us a call, we'll call one of the loan officers and we'll talk through that. They're going to lock and locate. Some of these programs we discussed are specific to CapEd, and CapEd only lends in Idaho.
Okay. Yeah, that's that was the one question that came through on my side. Yeah.
Okay. Well, Kittie, anything else to add? We're getting.
Well, I just appreciate everyone joining us today. Dan, you gave us some great information, so thank you. And we look forward to sharing more on Thursday about how to retire your mortgage before you retire.
Looking forward to it.
I will be tuning in for that one, because I think everyone should get some tips from that so that we can retire and enjoy life and have all that paid off.
Definitely.
Yeah. Hey, Dan, is there a slide after this one relating
to the giveaway?
Yeah. Just, we have a minute. I'd just like to give a shout out to CapEd, and we have a Get 100, Give 100 program. It's an incredible program. If you are a member of CapEd, if you want to open up a high yield checking account, when you open up that checking account, meet the qualifications, and the qualifications they're minimal. I won't get into the details right now, but you meet those qualifications, you will receive $100. And then at account opening, you choose a school. We have education regions 3 and 4, and we have schools and programs listed, and your other $100 goes to that program and that school that you chose. So currently we've given over 234,000 to 318 schools. And so that same dollar amount has gone out to our members. So we're well over the 460,000 that we've given back. And I think it's a great program. So, and it's not just sports. You see a lot of money going to athletics, which is wonderful, but we're also giving back to CTE programs, FFA, debate, cheer. I mean, it's across the board. We've had schools reach out and say, we started a mountain biking group, and we're looking to raise money. And so this is a way that we can help, grandparents can help schools that their kids are at, their grandkids are at, and that's just a wonderful program at CapEd. So I just wanted to give that a little shout out while we had some extra time, and I'd love to see those dollars go up for our teachers and our schools.
Great. And then did you want to touch, Lisa, really quick on the financial well-being resources?
Oh, absolutely. Yes. So this is free. All of this information is located at capedcu.com. Right down below in that bottom right-hand corner, there's educational resources, and that will take you to a subscription that CapEd pays for yearly. And we get that through Currency Marketing. It's a money thing. We may have close to 50 content packs that are available. I encourage educators to look at it, parents, church groups, anyone who's teaching. And it's a good refresher for grownups. I learned information on what makes up a credit score, what's that breakdown. There's budgeting. We have some of the content packs we do have available in Spanish. There's animated videos that are, they're entertaining and funny, but it's great content. And it's absolutely free. There's presentations that are accompanied with that and handouts. So we have it all packaged there for you. It's free. You don't have to be a member. Please go and utilize that. We really are staying true to our mission, vision, and values, and that's financial well-being and empowering everyone to make sure that they're doing the best that they can with the money that they have. And so I use this a lot when I teach out in the community, and it's wonderful. So Dan, Kitty, if you haven't watched them, that's your homework. Before Thursday, we're gonna talk about this.
Oh, it's gonna be a test.
There's gonna be a test.
Great.
Yeah, thank you for bringing that up. That's it's a wonderful resource.
Great.
Well, thank you, everyone. Everyone have a wonderful day.
Thanks.
Thank you. Thanks for joining, everyone.